Well, good morning, everybody. I have Mr. Chris Novak here with Nationwide. We're going to be going over group. So we're going to do this meeting, webinar, town hall, a little different than how Western Marketing has normally done them. What we're going to have is Chris kind of do a quick presentation, kind of going over Nationwide's offerings on the group side, kind of break into the self-funding aspects of it. And then we'll also touch on the traditional parts as well, because we can do some traditional depending on the state. Once we kind of go through that, what we're going to do is we're going to unmute everybody. And we are going to kind of do a little bit of an open forum, let you guys ask questions to your heart's content. We do ask that everyone be kind of respectful. So if someone else is talking, try not to interrupt, but yeah, so we're going to try this out. We haven't done one this way, but yeah, we're excited and we're kind of curious to see how this will go. And we're hoping that at least a really good discussion. And yeah, you can still ask questions in the questions box if that's something that you want to do, if you don't want to unmute. So with that, I'm going to go ahead and let Chris take over and go from there.
There we go. Sorry about that. I appreciate it. Thank you, Taylor. Everyone, thanks for joining. I really appreciate it. Trying to do this ahead of fourth quarter, obviously, with the busiest time of the year really kind of upon us now at this point. And if you're really considering group health insurance, I do, like Taylor said, want to have as much, kind of discussion as possible, and make sure everybody is prepped and ready coming into the fourth quarter. My contact information is up here for you guys as well. Please copy that down, and you can feel free to call me anytime. That number used to forward to my cell phone, and we're still trying to figure out our new phone system. So please bear with me as that's being changed up. But phone and email right there for you. And we have, again, you're always able to reach out anytime and with any opportunities or questions that you may have regarding group health. So, and this can kind of go really one of two ways. And part of that is I can just start presenting, and feel free to interrupt me whenever you feel. Or what I'd kind of prefer is I'll do a quick introduction of the products that we're offering, and then if you have any questions, if you have any concerns, if you want to know about process, if you want to know about things like networks, or even, hey, what works best getting in into an employer, we can talk about those sorts of things. So what I will do is I'll jump in first and just quickly introduce my product, and that is that we are now, I should say, a Nationwide. We are no longer Allstate. You'll still see Allstate on some of our on our quotes and on our marketing materials. That's going to make a hard switch in February of next year. So that's already on the docket. It's just a matter of, instead of phasing things out here and there, we're just going to do one hard, quick branding remarketing as of February. When, I don't know in February, but in February is what I've been told. We're a huge company, so we have a financial backing that even just a couple of carriers ago, when we were National General, is not the same as what we are here with Nationwide. If we were to be a publicly traded company, we'd be, I believe it's something along the lines of like 107 or 108 on the Fortune 100 list. So pretty proud of that. And number one in a lot of different markets for insurance and financing. Not financing, but what's the word I'm looking for? Like retirement plans and things of that nature. So level funding is what we're bringing to the table. Level funding, I don't want to overcomplicate it. It's the same group health insurance that you've always offered ever. The only difference being is, if you were to go back prior to the Affordable Care Act, we still underwrite. So we're doing exactly what we used to do back now 12 years ago. That seems like forever ago at this point, but it was 12 years ago when the ACA took place. And the major thing that occurred within that is underwriting had gone away. We were really good at the time when we were Assurant Health at the underwriting mechanism, using the underwriting mechanism to get really quality rates and fair rates for employers. And so that's where we decided to stay. And so we switched our functionality over to level funding. And that level funding has really been able to save a lot of money for employers, meanwhile keeping the benefits equal or better. Also paying you, the agent, significantly more as well, because we have an understanding of what the risk is to the insurance company, and we have the ability to include a little bit more, a little more premium in there to make sure you're getting paid well. So level funding, the big difference between fully insured and level funding, actually, I think I have oh, maybe I don't. I used to have a slide. This is a new presentation. Again, we moved over to Nationwide. That compared self-funding and fully insured. And the cool thing about that is the fact that everything looks, acts, and feels the same. We have the ability to underwrite, and at the end of the year, if a group overperforms in a good way, not utilizing too much or underutilizing in the claims, they will get a refund back at the end of the year. Something that every fully insured or metallic plan that you've seen out there does not offer. Okay, so those are the two things. The plan looks, acts, and feels just like any other group health plan would. For employees and for employers, they have the same responsibility that they would that they would on the fully insured side, which is just the total monthly premium. While we say self-funding, a lot of people like to think of major mega corporations who will take on like a Microsoft or a Tesla. They have the bandwidth and the finances available for Tim to have cancer. If Tim has cancer and it's $1 million, they can fund that because they have that much money. They have billions and billions of dollars, and that really doesn't impact their bottom line. The level funded option that we're bringing to the table does not put the employer in that position. They pay their one monthly premium. That is the extent of their liability. It's a really cool plan and something that you can drive home to employers and show them something that's different that not every other agent is offering. Fantastic networks that we're offering. Got regional networks as well for some states, depending on where these groups are located. We can offer multiple plan designs on each group, as long as there are 3+ enrolled employees. You can see here the number of plans that can be offered based on the group sizes. And we do offer groups of 50 and greater insurance as well. I just helped my colleague on the mid-market side quote a group of 257 enrolled employees. So those are opportunities that we can look at. We do have non-network pricing options as well. And that is where a lot of money can be saved for employers, but there are a couple of catches behind that. But we have a MAP team that handles those things. The MAP team is the number on the back of the ID card. They handle claims, customer service, balance bills, and even access to providers. So that said, I'm going to pivot now from that level funded product to fully insured. Here is a map of the blue states here that are all fully insured options as well, which is Wisconsin, Indiana, Florida, and Texas. Missouri should also be blue in here. So Missouri is one that we can also write fully insured in. And as of January 1st, we will be adding Utah and Tennessee to that list as well. So if you have any fully insured options or opportunities that are out there, or some clients in those states that don't want to go through the underwriting process or kind of know they're not a good fit for level funding because of the underwriting, those states have the fully insured option that we can still sell that without any underwriting being taken into consideration. We offer a couple of really great networks there as well. And then here you go. Now they mentioned Missouri. So these are networks that we're offering there in each of those states, which is Cigna OAP and then a narrow network that would be available in each of those states. All of our plans have the opportunity to have virtual healthcare as well. And we've got some other great inclusions. These cost nothing to the employer, but they are part of the plan. Papa Caregivers, which is kind of like a respite care. For reference-based pricing plans, we have Compass Connect, which helps, while we don't have a network, we do have a tool to help steer people towards providers that accept it. Vori Health, which is a free to the employee, essentially physical therapy and guidance to help avoid surgical procedures on things like backs, hips, knees, ankles. And then Cancer Coach, if anybody has the dread of being diagnosed with cancer while they're part of our plans, we do have a Cancer Coach opportunity that is provided free of charge to the employees. That said, I want to go ahead and really, Taylor, if there's anything you want to add in there right away, otherwise I'd love to open this up to the crew and kind of, with the baseline kind of 30 million foot overview that we just did. I try to keep it as simple as possible. Open it up and let people talk to us about what they've got going and maybe questions that they have about the group health.
Yeah. Let's. I'm gonna unmute everybody here, so that'll give you guys audio control to be able to mute or unmute yourself. So if anyone has questions, if you have client, if you want to run something past Chris and myself here, just let us know. Maybe you have a group and you're curious, like, can I do this? Can we do this? That's something, that's kind of what we're hosting this for. So I'm going to go ahead and unmute, and everyone should have the ability to do it now. So everyone is, everyone's unmuted. So you should be able to unmute yourselves. Let me see, we did get a question here. Pop it open.
Can you go back over level funding for us? Because I don't have a clue what you're talking about level funding. That would be great for me to know for starters.
Yeah, so level funding is self-funding. It's just the more or less aggressive way of saying self-funding. So when you think of self-funding, you have a true self-funded plan. What you do is you actually are searching for a stop-loss carrier, a network, a third-party administrator for claims and customer service, a pharmacy benefit manager, and with a true self-funded plan, you're going out and finding all of those items. What we're bringing to the table is all wrapped up into a nice, neat box with a bow on top with all of those items already in place. Okay, so it's group health insurance as you've always known it. So fully insured rates or plans. So if you've heard of a gold, a silver, a platinum health insurance plan that you'd see on, for example, the exchanges, it's group health insurance or individual health insurance, either one. What we're bringing to the table with level funding is, simply put, the same thing that you would see with a fully insured plan. The only difference is that we don't have to follow every single mandated benefit for each state. That's one. So for example, pediatric dental and vision is not covered on our plans. Odds are you're going to be offering a group health or a group health dental or group dental plan as well. Pop them on there and we can keep the premiums lower on the group health side. The other thing that we are able to do with this level funding, simply put, is underwrite. Aside from that, from an employee standpoint, it's group health insurance as you've always known it. You're going to have deductibles, you're going to have co-pays, you're going to have co-insurance, network options. All of those things are still true. So from what I'm going to do is I'm going to pull up a quote as well.
Yeah.
And allow me just one moment here while I do that.
What was the part
Uh,
about what was that part about they get refunded part of their premium if they have, like if they have a good year, there's not a lot of claims, do these clients get a partial refund of their premium?
So
Yeah.
they'll get they get a pool. There's a pool of money that that I think Chris is going to pull up a quote here first to kind of see that, and he'll show. So every group's going to have its own like pool of money. Essentially, that's the self-funding aspect of it. So that pool of money, let's say it's $10,000, right? Um, Everyone's claims are going to come out of that $10,000. That $10,000 gets expended, no problem. Normally, on a normal self-funded group, that would then go on to the employer. But in this case, what we're doing with Nationwide is you have a stop loss insurer, and so part of your premiums are going towards the stop loss. And so at that point, the stop loss insurer takes over, and all that comes right out of the stop loss insurer's pocket, not out of the employer's. So no harm, no foul. It acts like normal insurance the entire time because it is normal insurance. So you're not going to run any type of claim issue or anything like that when it does do that transition. Now, if let's say the group has a really good year as far as like no health issues, you had that $10,000 pool, you only use 2,000 of it. Now there's an $8,000 pool sitting there. They're entitled to half of it, 50%. So the employer will get $4,000 back. And so it's kind of a nice sales pitch for you guys as agents to be able to tell that to any of your employer groups that you're working with is, yeah, you could potentially get some money back if your group is healthy. And if your group, has health issues, no harm, no foul. Not gonna work against them at that point. But yeah, they could potentially get, so that's something where if you do have those younger groups where they, a bunch of 20-year-olds, those number one, those rates usually look pretty dang good. I know Chris and I have been working on a few groups for some of my guys here, and I mean we had some rates where the group was like $400, 400 and some change for the individuals, which if you guys are doing any type of ACA right now, you know that those premiums are getting outrageous and they're about to get worse this upcoming year. So a $400 a month premium, and that's, and I don't think we touched on it, but the employer does have to pay 50% of that premium. So really it's $200 for the employees a month, which is significantly better than a lot of the ACA or any of the AC alternatives that we have.
Is that an option, or is that a rider, or is that just something included on the plan?
That's built in the self-funded part. So that is the type of plan that this is. So we can either do the self-funded option, or in those couple states that we showed on the map, the Florida, Texas, Missouri, Indiana, and I'm missing one more. We can do traditional. And I know that was a question that Roy asked too. He's like, when should we present level funded versus fully insured? You can present them both. Fully Insured is it's kind of just the basic, it's the norm, it's what everyone is used to. The self-funding is a different avenue. It's similar, but it's something that does take a little bit more explaining, which is obviously kind of what we're doing here for you guys. And so it's just a little something extra to explain. But the premiums are typically almost always lower than a traditional quote would be. So it's just a way to save money. As well as they could potentially get a refund back as well. I know I've done one on a 145 member group at one point a couple of years ago. We quoted it out, and what was really cool was we had their claim data. So we were able to see, like, hey, if you would have had this plan last year, the group actually would have said, we were able to calculate it. It was like we were able to say you would have gotten $400,000 back last year if you would have had us. Now, this was like a $2 million annualized premium group. So yeah, the numbers are quite larger, so you probably won't see those, daily. But
That's still crazy to hear that a quarter of that premium is almost coming back. Like almost a quarter of that
Mhm.
premium would be returned back to the employer, which is just, it's amazing. It's awesome.
Mhm.
That's why this is in place.
Thank you.
Yep. And so one thing I haven't mentioned either is I haven't explained how nimble we really are when it comes to creating plans. So every single line item that you see here, I shouldn't say every single, but pretty much every one of these line items can be manipulated in some way, shape, or form to offer the group plan that the employer wants to offer to their employees. Okay. Obviously, every time we pull or push on one of these lines, so if we make this deductible instead of a $1,500 deductible, if we make it a $500 deductible, my rates are going to go up. If we make it a $3,500 deductible, my rates are going to go down. Okay. So all of these things, when you think of fully insured metallic plans, they're very stagnant plans. They are what they are. You can choose it or go away from it, whatever you want to do, but that it is what it is. Our plans are we can manipulate them. I can have a $1,500 deductible with a $3,000 out-of-pocket maximum. I could also have a $1,500 deductible with a $4,500 out-of-pocket maximum. We have lots and lots of different options available within our quoting capabilities. So whenever you see a quote from me, if there's something that doesn't quite look right, or you want to see something different, all you have to do is ask, and I'll be able to get that turned around for you. So this is an example of what one of our quotes would look like. And I kind of edited and manipulated these plans. There we go, I got there. Just to kind of show you the difference between network options, for example. Plan design wise, they're the exact same plan, 1 to 2. But the reason that we do that is because as we go along, you'll see the premium difference and how we can save groups tons of money sometimes. The plan 1 is my Aetna Signature Administrators Network plan. And you would see that right here when in the medical network designation. Plan 2 is my Cigna Local Plus, which is an incredibly good network. Whenever it's available, it's super inclusive in the area that it's available in. And it's actually a very broad network. It's also nationwide to a degree, mainly in large cities. So kind of going back up here, knowing that the networks are different, deductible is $1,500, 70% coinsurance after the deductible is met until we hit $9,100 out of pocket. Okay, so that's how this plan would look to an employee. We do have copays on these plans, $40, $60 for primary care physician and specialist copays. We do have virtual care as well on this plan. And which, mind you, is on any of our copay plans, whenever we have Recuro as a telemedicine vendor, it is a $0 urgent care or counseling visit for the employees that take advantage of that. We have an urgent care copay of $75 and prescription coverage of $20, $50, $75, generic, brand name, and non-preferred brand name. Premium wise, and I'm skipping over some stuff here. This is the refund, half of whatever's remaining in that bucket. We'll talk about that here, that bucket in a little bit. The premium difference is almost $2,500, or no, sorry, $1,500, simply for having a slightly smaller network, but in the area this is located in, it's as inclusive as the Aetna Signatures Administrators Network. The only place that it might not is if you get into a rural area, which, fun fact about Cigna Local Plus, if you have that network and you go away from home, so let's just say you're traveling for business and you go, 100 miles south, wherever that may end up being, and you have something that occurs that you need to go see a doctor, but you don't think you can make the 100 miles home, you can go see that doctor, and they have the thing called Away from Home that pulls in whoever you go visit. If they are in the Cigna OAP network, which is their big, broad, just great network, second largest or third largest network in the entire country, is my understanding. They will give you the in-network benefit for that visit. So it's kind of like if you have this, even if you go away from home, you're still in network if it's in the larger network. So pretty cool in that regard. So where's the meat and potatoes here, and what makes this plan unique is this mechanism right here. So you see your total monthly premium at the bottom here. This is the same thing that you just saw a couple pages above. The 3 lines above it are what make up the total monthly premium. If we take the claims account, so the 36.52 and 38 cents, if you multiply it by 12, you're going to get 43,828.56. My math isn't that good. That's just this annual aggregate number attachment point right here. Okay. This is the group's self-funded bank account. This is what makes it a self-funded plan. So again, we credit this account on day one as if it's all there, but the employer is just paying it 1/12 at a time over the course of 1 year at $3,600, $3,652.38. Again, why that's neat is because that's part of the monthly premium. It's not a separate payment. We're not asking for $43,000 up front or almost $44,000 up front. It's just the monthly premium to the employer. That's the extent of their liability month in and month out, their total monthly premium. Stop loss premium comes to my company, Nationwide. We are the stop loss carrier. Admin, sales, general expenses, that goes to our third-party administrator, Allied Benefit Systems. Your commissions are in there as well. They handle claims and customer service. So that's what that money goes to. And then the claims account fund, again, we already talked about. Why this is so cool is because at the end of the year, if the group underutilizes, and to Taylor's example earlier, let's just say that they have $10,000 left over at the end of the year, they're going to get it out of this bucket right here. So they use $33,000, $33,828.56 out of there. $10,000 is left over. We're going to refund the group $5,000. Simply put, they get a check for $5,000.
How does that money, is that premium credit or check?
They can use it as premium credit. I don't recommend that, mainly because it usually gets offset, especially when a renewal comes out. We're going to underestimate that at that point in time. And we're going to say, we think you're going to have $7,500 left over after the run out period is complete. So instead of getting, half of $7,500 back, you'll get $5,000 back, and you can turn around and utilize that to pay premiums. Because it is tax advantaged money, and this is coming from, I am not a CPA or a finance anything, but we have heard from an accountant that I can comfortably tell you that because those are tax advantaged dollars, you can turn around the following year and utilize that for any employee benefit that you're able to write off on, and then you just report the difference. So instead of, for example, paying out, let's just say your next month's premium, it's essentially the same thing as writing out a check for $12,066 instead of $17,066.
And this could also open up opportunity for you guys to cross-sell some ancillary type products too. So you can do voluntary benefits, voluntary, we have term, whole life, any of the accident plans, critical illness, hospital indemnity, dental, any of that kind of stuff. So they can use that money for that kind of stuff too. So this is a way to potentially, even the next year, maybe they weren't interested this year when you first set them up, but yeah, maybe they get that check for, 10, 15, 20,000, whatever it is. You could potentially say, okay, Mr. Smith, why don't we look at possibly setting up some voluntary benefits where you do some, where you chip in a little bit on some of those product lines too. So that can open up the opportunity for more sales on that front, being able to do that. Chris, is there a cap on how much a client can get in their level funded account? So are we able to play around with that annual aggregate attachment point to pump more money into it, or?
So we can't, we do have some level of maneuvering that. What we have to do in order to make this number higher is essentially make the specific attachment point lower. And the specific attachment point is the most any one individual can utilize out of this. So it could be a spouse, it could be a child, or it could be an employee. If somebody has a heart attack, for example, $30,000 is going to get utilized out of this bucket to help pay for that claim. Once any one individual hits or exceeds $30,000, the stop loss carrier nationwide covers everything in excess of that for that person for the remainder of the 12 months, however many months are left over in that 12-month period. By doing that, what it will do is it will increase the total premium, however. So if you want a likelihood of refund, we can reduce this. That will make the premium go up. So it really is, it's kind of a game that the employer can play if they really want. Anytime I lower, and actually allow me just 1 second, I can give you an example of what that would look like if I were to just reduce the specific limit down to $20,000. What would happen to that? And I'll just verbally tell you here. The total monthly premium increases to by about $1,000 to $18,095.66. Okay, so $1,030 roughly. And the annual aggregate attachment point increases only $1,000 to $44,892. So for $12,000, we can increase this number, but now you do need at least 2 people to hit that spec limit. So your likelihood of refund is significantly better.
Mm-hmm. So Fred was asking, can an agent to new to group health sales be able to sell without being face-to-face? He's just kind of interested in basically a good way to introduce himself when he calls, and yeah, if he can do it all over the phone or electronically.
Yeah, the answer is absolutely. As a matter of fact, I would make the argument that about 50%, maybe even greater, of the sales that I work with, particularly with Western Marketing, are done over the phone, where they've or Zoom meetings or something to that effect. And from that standpoint, the cool part about doing it like this is if you want an additional resource on those calls when you're making them, especially after underwriting is complete or presenting the opportunity, you have resources like myself. I'm available. I obviously our schedules have to work, but assuming that that's not a problem, I'm happy to jump on a phone call with you and the employer. Taylor, I'm certain would. If you run into an agent that or a group that speaks primarily Hispanic or Spanish speaking, you got Sandy on your side too. So these are all, definitely use all forms of media that you can to sell, in person, on the phone, Zoom meeting. We're here to help you, and you just let us know how we can help you. But if you can drudge up those opportunities, we want to see those cross the finish line.
So we have a couple more questions, and I figure I can probably just answer all of them just in one quick-ish spiel here. So basically the steps of getting started to do a group. I know, Roy, you're asking about census. Yeah, I have one. So I have a blank one for you, but if you have something that at least has all that information that I need that would be on a census, we can utilize that too. But yeah, I mean, we essentially just need those date of births, and we need to know obviously how many kids are going to be on there, and then the spouse's date of birth on there. And then we need zip code for the business, as well as at least like what business they're in, or like the SIC, when we can kind of operate with that, and then the name of the business. So I think that's bare minimum of essentially what we need. And I have all that on our blank census. So I'll send that out with the recording of this and everything afterwards. So you guys will all have that. But as far as like how much assistance that you guys get, we try to make it real easy. It's very different than the individual side where, us at Western Marketing, we're like, yep, here's the application. You got it. We might walk you through it, but On the group side, it's a little bit different. We do a little bit more hand holding with you guys. You know, what if you want it? You don't have. We don't have to be a part of it if you don't want us to. But kind of the first step is getting us that census. So when you have that census, get it completed with all the data. You shoot it over to either myself or Sandy, whoever your marketer is that you work with on the group side. I get that to Chris. Chris is going to put something together for you and then send it back to me, and I'll get it over to you. When I send it over, I always say, hey, let's set up a time. I'll walk you through it. Let's just review it and take a look. So I'll set up a meeting with you. I can walk you through it, or we can have Chris also on the call as well. And then once we have that done, Chris and I are more than happy to get on like a Zoom call or something like that with your client. We can pitch it for you. You can be on it. You can introduce us and say, hey, these are my experts over at Nationwide. I can pretend to be Nationwide. I have no problem. I'm still waiting on Chris to send me a shirt that says Nationwide, but we'll get that. I have an Allstate one. I don't have a Nationwide one yet.
I don't know if you can see it, but you got an N behind your name. It kind of looks like a Nationwide, and I'm just saying.
Nationwide. I need to color it blue, but no. So we can hop on a call and we can do the full walkthrough with the client. We can answer any questions. I'm not quite as knowledgeable as Chris, but I am at least I know enough to be dangerous, and I can kind of break it down for the client. If the client wants to move forward right then and there, cool. We'll get applications going. Easy. So we can do applications two different ways. We can do paper applications. We can do them that way, or we can do online enrollment links. So we can do it through a link. If they want to go the link route, I just need to know, and then Chris will get one made up, and I'll send it out to you guys, and then get those out. We get all the employees' applications. That's going to gather all the underwriting data, because the pricing that we're looking at when we do the census, that's like teaser rates. That's going off of some kind of bare bones data. That's just looking at their ages and the makeup of the plan. Obviously the zip code is playing in there, but we're going to be able to get a more accurate quote. If you have a group of like 20 something year olds and none of them, have any type of health issues, yeah, your rate might go down. But if you have a whole bunch of people on there that have 7 heart attacks a week, that rate is probably going to go up. So I know we had one not too long ago where somebody was pregnant on there, and then there was also a gastric bypass and a couple other things. The rate went up. It wasn't astronomical, but it did go up. The client was fine with it. I think they did understand that. They're like, yeah, it's instant claim is going to be coming. So, stuff like that can happen. But, we have seen some where, yeah, the group is healthy. They don't have any major issues, and the rate will go down. Another thing that can affect the rate is if you have some people on there that are 65 and over. We have had a few quotes that I've seen in the past that, yeah, the rate was pretty high, but that's because they had a 67-year-old on there and a 65-year-old. See if you can get those people over on the Medicare. They're making the rates of the entire group go up. So if you can steer those people towards getting onto Medicare and getting set up there, get them off the group, that'll knock the premium down as well. But yeah, so once we get those applications in, we can run it through underwriting, and we can get kind of more of a official pricing on that. We can present that back again. The client says yes, perfect. We get an employer document filled out, and then we go. We start getting it set up, and kind of Chris can kind of walk you through the rest of the way on that one. And
Ask a question
we get
real
it up
quick.
and running. Mm-hmm.
So I want to know. So let's just say, because you said the rates go up if they're 65 or older, they should just be put on Medicare. What if you quote them on the group, but then later on, let's just say next year, January, they're eligible for Medicare. Would their rates still go up?
So if somebody is 64 and then turns 65 at renewal, you're saying?
Not at renewal, after renewal.
No, the rates. So when we sell the group, the group's rates will be locked in at the rate that we sell it at. So that's a
Okay.
guarantee for 12 months. The only time that we reserve the right to change that group that I've ever seen doing this is when there's been a merger or acquisition, and they've brought those people on immediately midstream onto the group health plan. Even then, when that has occurred, we've taken it into, I should rephrase this, we've taken it into consideration to change rates. However, we have not changed rates. We don't want to change rates because that is a disaster waiting to happen. So barring that there isn't anything just absolutely crazy asinine, anticipated, heart transplant or liver some sort of transplant, we're probably not going to change the rates,
Okay.
even in those scenarios. And that's happened twice where I've had them even consider, in my 13 years, twice where they've even considered changing rates, and then they ended up not changing the rates anyway. So
Okay.
yes, we reserve the right to change them, but only in very limited circumstances.
Okay. Thank you.
You bet. Great question.
I have a question if I could.
Yeah.
Just a general question overall for somebody who's really never been in the group health space. Marketing to business owners. Do you guys help with any of the marketing? Do you guys help with any of the, I don't know, just in general, getting out there and talking to business owners, a strategy to talk to business owners, maybe the smaller groups, smaller companies, particularly in the Hispanic community. That's kind of where I focus my attention, but overall in general, to a strategy to approach, I guess is what I'm saying, business owners.
So, I mean, I can kind of hop in on like my approach that I usually take with most of my agents. Is my suggestion is one, I guess everybody write this down if you can, but I like to use a resource called manta.com. It's MANTA.com, like the manta ray, well, the fish. It is a small business search engine. That's all it is. It's like Google, but for small businesses. So when you go on manta.com, you can plug in your area, where you're at. You can type in roofers. You can type in chiropractic, law firms, whatever you want. That will pull all the local ones around you. And then you can just start going down the line, dialing. Their phone numbers are all on there. Their addresses are on there. So, I mean, I usually suggest as well, if you want to do a mass deal, all their addresses are on there. You type up a letter, go that route, send it out to everyone. Say, hey, do you have health insurance for your small business? No? Okay. Would you be open to me, basically quoting it? If they do, would you be open to me trying to quote it and see if I can beat it? And so those are kind of that's like a really easy route, and it's free, which is kind of one of the best parts about it. Other routes you can go. I know Chris and I.
I'm sorry, what's the website, Chris?
It's called Manta, MANTA.com.
Thank you.
Mm-hmm. And so another thing that I've talked to Chris and Jake over at Nationwide was possibly putting some materials order, so we can get something designed up as well, some like postcards, something like that, that agents would be able to send out, and just maybe make it where it's fillable and something like that, and then you just mass print them off and start mailing those suckers out too. So that's a good one. And I have heard some people just go door knock businesses. So, you go down to a big strip mall or something like that and start walking in there, introduce yourself and give it a shot. I know I've talked to a few agents. That's what they love doing. Otherwise, if there's any small business owners that just in your personal life or professional life, it's worth giving them a call. Just let them know that you're able to do group health insurance, because I think one thing a lot of people don't realize is with the changes to the ACA this year, premiums are going to be going up for a lot of people. Maybe not everyone, but a lot of people. So, and at least in my opinion, I think the days of not being able to offer health insurance benefits to your employees are numbered at this point, because if we just because I do most of our ACA here, so I'm always looking at the ACA plans, and they're just going up and up and up. And especially those people, if they might fall, on the subsidy cliff this upcoming year, there's some bad increases coming for them. I mean, I'm seeing, it can be anywhere from 100% increase in their premium to, I think, I saw West Virginia had a potential of like 597% increase if you hit just the right client on the right dollar amount, which is just astronomical in pricing. And so, being able to hold on to employees, valued employees, it's going to be something where I think that might hit home for a lot of them. Like they're going to have to start offering some health benefits in order to keep it. So that just opens up a lot of opportunity for you guys to be able to come in and pitch that. And then, most of these small business owners, they know other small business owners. Worst case scenario, they know their competition. So
I have a question, Chris.
Mhm.
May I chime in for a second?
Yeah.
Hi guys. Sorry, my name is Martelli Adeka. Thank you for having me. Really appreciate it.
Awesome.
I have been doing I'm switching over to mainly group. So when I received this webinar, I thought it was great. I have a potential client in line. They have about 40 employees.
Okay.
It's I quoted the client specifically wants Florida Blue for some reason because or whatever. They're in Florida. It's a 3
Blue
doctors
Cross.
office.
Mm-hmm.
Yeah, Blue Cross. I've quoted based on the premium you shared, they're about similar. I'm happy to send it over for kind of like a potential um, cross check type of thing. I'm wondering, I, I don't know if I'm appointed with you guys. How does it work? But I'm happy to send it over just to see what they would offer. Now, I don't know on what basis I would be able to convince them because they want the Florida Blue for specifically, perhaps it's Florida Blue give them the approval on their like on the back end type of thing. Some carriers they're not taking those carriers yet, in their offices.
Okay.
Um, I'm curious to know how would you deal with something like that, seeing that yours is more like a privately funded plan. Not sure how well it would work in this case. It's a separate
Well,
question. If you have to take it offline, it's fine. I just
yeah, no,
figured
no.
out we can
This
send it
is
everywhere.
very important. I think this is awesome to hear because it really kind of gives you a look into an employer's mind. And when you're thinking about, when someone is hard pressed for a network like Florida Blue, um, it sounds like it's a provider of some sort already. So they have an experience um, of, hey, we accept Florida Blue, but maybe we don't accept rather any other carriers as as a provider. So we are offering Signal Local Plus in Florida, in majority of Florida, not all of it, uh, which is an extremely inclusive network down especially kind of a little bit north of Orlando. If you cut that straight across west and then straight down, pretty much covers the entire state of Florida. Really good, really inclusive network. We also have Cigna, OAP, and Aetna. Now,
Is that from central down to south, like South Florida?
yeah, all the way down to South Florida.
Cool.
Yep. So really inclusive network. If you look at the Cigna, OAP, and the Aetna networks, those are about as inclusive across the entire country as you can possibly get. It's just going to be a little bit more expensive than that Cigna Local Plus network, which is why I lean on that Local Plus network. Florida Blue, a lot of times when people are quoting that, they're looking at an HMO. HMOs they're great. Frankly, I can't knock them, but a lot of people get frustrated with them because they can't just when something's happening, they can't just go see the doctor that they want to see. They have to first go to their primary care physician, then they have to get a referral. That referral has to be approved. That then and so on and so forth. And you might have to go through 2 or 3 approvals or referrals before you finally get to the person that you need to see, and that's been a month. Whereas the PPO plans that we're offering are go see who you want to see. Plain and simple. It's a great plan. And that's why we like those plans so much. But if they're hard pressed on Florida Blue, I think premium speaks volumes a lot of times. And if we can save them money, fantastic. Then I think they should go down that next, take that next step of underwriting. Florida Blue, if we are competing against an HMO, we are sometimes hit or miss. Sometimes we are not as competitive as the Florida Blue HMO. So, and that's full transparency. And just like any other health insurance or any insurance that you've ever sold in your life, not every carrier is going to have the best rate always. Majority of the time, though, when we come to the table, we're going to come to the table with a quality plan and a very competitive price before underwriting is complete. At least underwriting obviously can manipulate that that decision on what looks best at the end of the day too. So would love the opportunity to quote that, and we'll take that offline and maybe have a little further conversation about it. But I look forward to getting that quoted for you.
Sounds good. Thank you, Connor.
Of course.
You're
There,
going to talk
any?
about. Oh, go ahead.
I'm sorry. I was gonna say, is there any kind of a video training or something, introductory into the group space for, newbies out there that are looking to get into that, or maybe outside of Nationwide or just in general, a resource of some kind?
Yeah, so I don't have anything that's recorded currently. I have PowerPoints that I can send you. For example, I can send you this PowerPoint right here.
Okay.
But I think the quote that I was kind of just showing off a little bit, that is the best training tool that I have personally. So when it comes to what's the best way to go about it, I can lean into the little details where where we have some niche markets. For example, we'll write groups with 1099 employees in it. That's something that we will do. And it can be the majority of the employees are 1099 employees, which is just fine by us. So we have niche markets that we can play in, and we can also just talk each of the every item that you have concern about or want to know about. We can talk about those. That's what I'm here for. This is a corded headset. So I'm chained to my desk. So if you call and I don't pick up, it's because I'm probably having the same type of conversation that you want to have with another agent at that point in time. So by all means, always lean on me. I'm more than happy to jump on a call and spend 30 minutes, even an hour talking about group health and making sure that you're comfortable with what we're bringing to the table for the employers. Because we want you to be dangerous. We want you to feel good about walking in the door. We want you to look good. So you
Thank
can
you.
answer those pretty basic questions. And if you have more detailed ones, just say, hey, I'm going to get this guy on the phone real quick if I can, and maybe he can answer the question right then and there. And that's a flex in and of itself. Like, hey, I got the carrier rep's, phone number, and he might be able to answer my question right now because I'm a big deal to him. And I'm going to try to do that. No, and seriously, use it.
I appreciate it.
And lean on your marketer too. So like,
Yes.
Raul, I know Sandy is your marketer, and I mean, shoot, I know he's coming down to see you guys here in like a week or two. So
Oh, are you in
when
Houston?
he's down there. No, they're going down to Arizona. So I know Sandy's going down to Arizona here in a couple weeks. So
Nice.
you use him when he's down there. Ask him if you're going to be there when he's down there. Use him. Ask him questions. Drill him all you want. Make him do training for you guys with group. That's our job here. I can do one-on-one trainings. I do them all the time. I'm gonna definitely have to get this updated nationwide one. All my presentations are all state, but pretty much same info, just different letterhead there. But no, so I mean that's kind of one of the things is we're here at Western, and then also Chris at Nationwide. We're here to train you, help you out any way, shape, or form. And that's a big part of the group side and kind of what I was referring to earlier. We hold your hand through this whole process. We know, if it's something if you've never done group before, it's another beast. We know that. And that's what we're here for. We're here to help you guys. We're here to make you guys look good in front of your clients, help you get that sale down. I mean, once you get a couple sales in, you won't even need us. We're still here if you do, or if you want us there just as a security measure. But it might sound difficult, and I don't know if to you guys if this is sounding easy, difficult, in the middle, but once you do this a couple times, it's simple. You won't even need us. I know. I don't know if Steven has his mic hooked up or not, but I know he did a first time group.
Are you, sir?
Yeah, perfect. So yeah, I see Steven's on here. Steven was the first time one that Chris and I helped him out through his. Steven, do you want to talk about how that process went for you?
Yeah, sure. So I found a group health client. They were very interested. They got me the stuff. We did the survey for them. Within 24 business hours, Taylor and Chris got the quote back. I presented it. The owner of the company goes, "Well, what does this mean?" I said, "Well, let's be honest. I'm new to this. I don't know. Let me schedule a meeting." We scheduled a Teams meeting. Chris and Taylor were both on. I sat back in the corner. They did their spill, and we closed a nice app. It was a great, easy process.
Well, there you go. Can't argue with that one. So I guess another nice thing we didn't really even touch on is we also have a bonus program going on right now. Chris, do you have that pulled up that you'd be able to share on the screen?
Yeah, I'm trying to do that right now, and it's giving me a hard time with where I have the. Oh, the answer will be yes here.
Yeah, I'm gonna send it out to you guys all anyway. But it's a pretty slick bonus program. This is something that we kind of set up with Chris at Nationwide. Here it is. So
sorry.
We had it up, and then it ran away. So your first case that you write, you're getting $500 on this bonus program. You're getting $500 from Nationwide here. I'm gonna match that here at Western. So not only will Nationwide pay you $500 on your first policy issued, I'm gonna cut you $500 as well here from Western. So you're getting $1,000, and that's outside commission. And we'll talk commissions one-on-one. We don't do it publicly over webinars like that. But yeah, you'll get $1,000 pure bonus. Now the next level, we're gonna go off of annualized premium on those. So you have to have a minimum of 2 groups sold. So on your second group, you start qualifying based off the premium. That first level is 100,000 annualized premium, which honestly is not crazy to hit that, especially if you start getting some of those larger groups. As they start building up, those premiums do start going in, and especially if you have families, all that kind of stuff, those premiums do start adding up because that's total premium.
Yes.
So then you get $1,000 on top of that 500 that you got before from Nationwide. You hit 250,000, you get another 1,500 on top of the previous 1,000 and the 500, and it all stacks all the way up. I ran the numbers, and I'm not great at math, but I can do kind of simple math. I mean, you're looking at about $45,000 in pure bonus, and that's if you were to hit 3 million annualized premium, and that's beside your commissions. And then I'll be honest, if you hit 3 million, I'll probably throw a couple grand in there too, because thank you.
So actually, and I did when I was down visiting Sandy and Taylor and the rest of Western Marketing about, what was that, only a week ago, 2 weeks ago? 2 weeks ago now?
Yeah, about 2 weeks ago. Mm-hmm.
I did get them to agree that if an agent is able to hit $2 million in annualized premium, they will pop in the extra $3,000 to make it a nice, clean, easy $30,000. So that was really cool. And I hope to have that problem. Our intent of having this bonus in place is to pay you guys bonus dollars. And it's not difficult. And I mean this when I say this. It really is not difficult to hit $100,000 in annualized premium. I know Taylor already said that. $250,000 can with a couple of 10, 15 enrolling employee groups can hit $250,000. You could simply put 2 groups to get that. Your first ever case bonus, by the way, that is a bonus that you get regardless of whether you write 2 cases or not.
I guess we got a bunch of questions here. There's, can we set up a newbie treating? Yep. Natasha, just reach out to me. You guys will all have my contact information afterwards. So I'll send a mass email out once this recording's up and running. So no problem on doing any of that. Going into how do we get paid commissions? Is it per member per month or a percentage? It's a percentage. So it goes off of that annualized premium. So again, that's a conversation that we'll have offline individually with everybody. Besides that, I think that's about all my questions that I'm seeing on here.
I will leave the commissions questions to you, Taylor, but I will tell everybody that I promise you, we pay better commissions than every other carrier, period, end of story. I know how they do commissions. So I'm not going to steal Taylor's thunder when he talks to you because frankly, it's going to be an exciting conversation you get to have when you find out how much money you get to make on it. But we are paying best in
because of downlines. If there are downlines on here, obviously I have to talk to the upline. So that's why we don't do it publicly on here. But if you call me afterwards, I can look you up in the system and I can tell you what your commission will be. And the cool thing about there's really exciting things about group commission. So I know some of you are on the call that I do group with. So you guys already know that, but yeah, there's a lot of exciting stuff about group commissions that make it very different than the individual side.
Also one more thing too. This is an agent bonus that we have in front of us right here. It is not an agency bonus. It does not get paid to the agency. It gets paid to the agent specifically. So you write the case, you get the money.
Exactly. So it doesn't matter if you're LOA or anything like that. Money goes to the agent specific on that one. That is outside of any type of hierarchy sort of deal. I guess I think the only other question that I'm seeing on here, Kathleen was asking of just the minimum people for the group.
2 enrolling employees. So there's the only catch behind the number 2 is if you have 2 enrolling employees, you must have the only one that we cannot do is if it's a husband and wife only in the business and they are literally the only 2 employees in the business. They don't have any part-timers, any other full-timers or anything like that. I cannot write that group. If, however, that husband and wife group have a child who is an employee working part-time, that now opens them up that we can write that group. So the only time that we cannot write the group is if it is a husband and wife and they are the only 2 employees in the entire business. Period, end of story. Not a third employee at all. And the only reason I clarify that is because again, you can have a part-time employee who is not eligible. That would make the husband and wife able to then write the group because they have an ineligible employee because they cannot write if they're working 10 hours a week, not eligible. Okay, simple as that. Now husband and wife can write their own group together if they wanted to.
As far as state availability on what state we can't do, Hawaii.
Yep.
Every other state we can do. Cannot guarantee we'll be hyper competitive in some of those places. There are a few states where it's a little rough, but
one of which is New York. I would say don't bother because you need at least 51 enrolled employees, and our rates, frankly, aren't competitive there anyway. If you have the opportunity and you want to still look at it, we'll still look at it for you. We'll still quote it. We'll still put our best foot forward. But generally speaking, you're not going to probably see much success there. But aside from that, every state is pretty much open. California is a lot more difficult to do when there's under 20 employees. I actually just quoted a group in California for the first time where I've actually seen my rates be competitive. So it's really bizarre. But it was bizarre seeing competitive rates in California. Usually we're not that competitive there either. So
Mhm.
those are the two states where I'd say if you're, again, we'll quote it, we'll show you if we're good. Let's keep rolling. If we're not, any other state's good.
And the leg up you might have to, you can always do the sales pitch of the self-funded aspect. If I know we have a decent amount of California agents, quote it out anyway. Put on your salesman pants and say, hey, well, you could get some of this premium back if your group is healthy. I mean, that is in itself, that is a set, that's a huge selling point on these types of plans to be able to say, yeah, if your group is healthy, you can get money back. So, it's a big selling point that I definitely stress that you want to utilize that as much as you can. I guess we're kind of coming to the end here. Does anybody else have any questions that they want to pop in here, unmute and ask before we kind of close out? I'm not seeing any. So with that, why
So
don't we go
good.
ahead? Oh,
I do have
yeah, go ahead.
another. This is Martelli again. I do have another group I would like for you guys to just to rate. It is another group with Florida Blue. It's an existing group, but it's about 7 employee in the office. But
Sure.
some of the people are in Medicare. Two are retiring. One is not on the plan. Is a husband and wife on the plan and a child. Just want to see what we can do on it, how we could compare against Medicare, and see if there's a case that we could do something else about.
That actually leads me to the way that you pose that. I want to make sure I'm clear about something
Mm,
too.
no.
Is if we are doing like a husband and wife group, they have to both be employees of the group.
They are.
Yep. So okay, in this case, that'd be fine. I can't do a single plan, like as in it can't be an employee and spouse
No,
plan.
that's okay. Even if they each have their own separate plan.
Exactly.
However, one of the employee need to be able to have the child on it. It's
Yep.
because the other two people that are working there, two are retiring. One is retired, one is on Medicare. The other two weren't on the plan at all.
Yep.
And just want to see what we could do on that.
Perfect.
Yeah,
Perfect. Yep.
and I'll get you the census, or if you have one, Martelli, feel free to send it to me. I'll send an email out after this too. So shoot over to me for each of those groups that you have, and we'll get them quoted out, and we'll work on that for you.
And
Let's
and
get you some
what do you
numbers
need?
out.
You just need the census and
Mhm.
the name of the group, tell you how many,
Yep.
the age.
Name of the group, the zip code. If you have the SIC code deal, or at least give us like what business they're in.
Okay.
We can operate with that. So after this, I'll upload this webinar, and then I'll get an email sent out, and it has my template census for you guys too. So, and that has everything, all the spots on there to fill out. So
And
um,
if we already have one, a regular Excel one, we can use that as well, or we have to
yeah,
transfer the
yeah.
data to
If
your
you
system.
no. If you have something, send it over to me. If there's something missing on there that we need, we'll let you know, and we'll just say, hey, what's the zip code, or hey, what's the name. I've had some like that where they send me over the census. I have everything but the actual name of the group. So something simple as that. So it's pretty relaxed over here. So you send it over, we'll take a look at it, and we'll say, hey, we need this or that. So
Okay.
pretty easy. We'll get
Sounds
those
good.
numbers back to you pretty quick.
Sounds good. Thank you, guys.
Thank you.
I
Appreciate the questions.
appreciate it. Look forward to chatting.
Likewise.
Okay.
All right. Does anybody else have anything else?
Yeah, I mean, I have a group I'm looking at as well. So law firm, I have the
Okay,
census, I have everything as well. Um, so I kind of need some quotes for them.
for
Essentially, the
sure.
biggest thing about that, so they're going through some company changes right now. And with them, they have about 33 employees. But they only gave me basically the census for 29 employees, and those other employees, I'm not really able to get in contact with them right now because of like they're going through like a big thing right now, a merger, or not, or a buyout. um, can I put in for those 4 employees I didn't get their information, can we make those up? Because I don't think we can because I remember you did say that, depending on the age of those people and this and that, like the rates will be completely different.
They will be, but what I would tell you to do is just send over the census that you have. None of this would really makes a big difference until underwriting is complete anyway. So at that point in time, we'll have an accurate census when we do underwriting, and that's when we'll get them the firm and final rates. 3 people on a group that size, 4 people on a group that size they're not going to make a huge difference. From without the underwriting having been complete already at this point. So I wouldn't worry too much about those people right off the rip here. We still want to get rates in front of them in the meantime and show them those 4 tiered rates, that employee only, that employee spouse, employee child, and family rate. That's what's going to be
Okay.
important to look at. And those 3 people are
they're
going to change
teaser
it.
rates.
10,
Yeah,
they're going to be, it's going to change
everything.
it $10 up or down.
Yeah, exactly. So
Okay.
they're teaser rates. They're giving guesstimations of like, this is what it is basically going to look like until we have more underwriting data. Then that's when the changes will happen based off of health and everything. And so if we add in a couple more people, it shouldn't be too bad. So,
Correct.
but it gives them a ballpark idea, and that's kind of what most of these employer groups are looking for right off the bat. If they even want to pursue it, if they want to go down the road, maybe they're just like, oh nope, that's twice the price of what I'm used to. I guess another thing to also win those quotes, and I always stress this with all of my agents, don't just blanket send it over to your group. You want to call them, be on the phone with them when you send it over to them, and walk them through it right then and there. Because if you send them that quote, if you remember looking at it, it shows the total premium. A lot of times with some of these other companies, they show just what the employees are paying biweekly. So yeah, if they're thinking, oh yeah, well, we only have $100 coming out of our paychecks every 2 weeks, but then we send a quote of $400 total, they're gonna, say, okay, well, this is 4 times the price. Well, the employers have to cover 50% minimum. They can do more if they want, but minimum they have to pay 50. So boom, that knocks it down to 200 right there. Then if they're doing biweekly pay, split that in half again. So then it's back down. Now it's down to 100. So you want to make sure that they understand that, because I have had a few people where they just got that, the employer just completely shut down, and they're like, nope, that price is too high, and wouldn't even let the agent explain or get on a call with them. So that's kind of a critical part. I always say get on the phone with your client when you send it, so you can walk them through it, and then you can let them chew on it. Set up a call with us. We can help walk them through it, answer any questions. But all right, well, this has been, I think, a pretty good webinar discussion here. I'm really happy with everybody asking questions. That's always great. I know from my perspective, doing all the webinars that I've done, sometimes it gets a little boring when it's just, 1 or 2 of us up here just kind of yammering for about an hour. So I do appreciate everybody asking questions and having a really good kind of back and forth. I'm going to get an email out here, hopefully within the next hour or so. Once that email gets out, it's going to have all my contact info. If you do work with another marketer here, Sandy and I are predominantly the main group guys. So if you do work with Sandy, just let Sandy know. He can do that. Worst case scenario, you can always send everything to me, and I can communicate with Sandy on it as well. But get us those censuses. Let us quote it out for all those groups, and then start prospecting. Use your resources. Use Manta. Use anyone that you're getting, any groups that you might know. I will have this recording, so you'll be able to watch it back if need be later. So I'll get it posted on our YouTube page here, and then I'll get that sent out so everyone has it. With that, I think it's time we end this meeting, and feel free to give us a call. Our phone number here at Western, 800-852-7152. Thank you.
Thanks, everyone.